Welcome back to Intables, everyone. So again, going over my daily plan on exactly how I plan on playing into the S&P. I go over the SPX here on Saturdays. I go over the SPY every single day during the week. As you guys can see here, again, we do have a doji candle coming out, an indecisive candle. As you guys can see, a very small body of our candle coming in. So again, this is a spinning top doji. This is, again, a smaller body coming in. On the SPY, we have a larger body. So again, not representing much here other than indecisiveness as we are leading into FOMC Fed minutes on Wednesday. So again, that's going to move the markets possibly higher or lower depending on what our data comes out as that day. As you guys can see, again, we have a decrease in buy pressure as our EMA lines are pointing up. So again, we have, again, that strength here, but we also have that cool down. So again, looking for that confirmation on an increase in pressure here would be exactly what we're looking for. Or if we are going to continue on lower, we're looking for our EMA lines to start to curl down here, possibly cross down. Again, we need our 12 to cross down below our 26 here if we're going to continue on lower here. However, we need our EMA lines to cross down below the median or MACD if we're looking for, again, newer lows in the market. That's what we're looking for. I'm going to go over everything and what we're looking for going into Wednesday's FOMC meeting. Now, before I jump into this, if you guys can do me a huge favor, smash that like button if you find this video useful at all. Hit subscribe if you want to see my daily plan on exactly how I plan on playing into the market every single day. We go over candle structure, overall strength levels, and any key indicators that we need to be focused on. And again, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Instables, and again, we mention any breakout that is worth looking at throughout the day, go to instables.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys here on the SPX. Before I jump into the SPX, I wanted to go over the dollar. This is extremely key. This is extremely key for the SPY as well. Key for all markets. We are looking for, again, the DXY to continue on lower. As you guys can see, we are sitting on a current bear flag, looking to see if we will continue on bearish or if we're going to possibly come back higher and possibly retest our 20 and do continue on lower. So again, if we do get a spike, if we do possibly fill these gaps this week on that possible anticipation of a bearish FOMC meeting, then we would be looking for those possible gap ups here on the dollar, which would give us a gap down in the market. However, if we do continue on with this bear flag to the downside, if we anticipate a possible bullish FOMC meeting, then that would be that continuation on lower here in the dollar, and we will get that strength on the SPX. So again, just keeping that in mind. Again, the dollar, the DXY, very key that we do watch. As you guys can see, currently we are just above our 20-day moving average, still testing. As you guys can see, a very nice bounce off of our 20 as we were testing again on Thursday, and now we are just above it, looking to see if we will continue on with this indecisiveness to the upside. Again, we have the upper end of our channel that we are looking for as resistance, as a possible rejection point, and looking for that bullish candle setup above the upper end of our channel here if we are going to continue on higher. So again, we need that bullish momentum on the upper end of our channel here if we are going to continue on higher. As you guys can see, prior we had, again, multiple rejections this year on the upper end of our channel here. So again, making sure that does not happen here. And as you guys can see, our overall strength, again, very much showing us that we're indecisive at this point. As you guys can see, a decrease in buy pressure, again, on a cool down. However, with our EMA lines crossing up, we are showing a lot of bullish momentum. So again, we're looking to see if we do continue to cool down here with possible divergence on pressure, or if we do continue on higher on an increase in buy pressure for that continuation with our EMA lines crossing higher here. As you guys can see prior, again, we had multiple times where we crossed over. We looked like we were going to possibly cross down, but however, we didn't. We continued higher. Even at this point, we cooled down. However, we did not continue on below our 26. We did continue on higher, so we did continue on with that rally, with that increase in buy pressure multiple times here. So again, that's exactly what we're looking for here, to see if we do continue on higher or cool down here. Now, as far as if we have room to run to the upside, looking at the RSI here, as you guys can see, we are pointing up, again, showing us that we could go either way here. One thing I do like about the RSI is that we are not overbought yet, so it does show us that we possibly do have room to run to the upside. Again, this FOMC meeting could be extremely key. If they mention anything about a possible cool down on rates, then the markets very much will continue to anticipate and very much convincingly anticipate that decrease in rates coming in December. So again, keeping that in mind. And now lastly, looking at our intraday levels, again, looking at the 1 hour chart, as you guys can see, again, we did have our gap up in pre-market on Friday. Again, we had a cool down, and then we had a slight cool down and a slight gap down, and we did fill that gap down. So now we're looking to see if we continue to respect our 20 here and continue on higher. If our 20 crosses back over, if we continue to respect it, and if we do continue on above our highs here at 4,028 is what we're looking for. Again, keeping an eye on exactly how we respect our 20, what our bullish candle structure is at that point is what we're looking for on the hourly chart. Now, as far as our levels to the downside, again, I just would be very careful. Again, we do have our gap downs that we had here. We also did fill this gap and gaps back up on Friday. So again, leading into FOMC minutes on Wednesday, there very much could be consolidation. And if we do gap down, then we could possibly have another gap up like we did have again on that anticipation leading into Wednesday's FOMC meeting. Even if we do continue on higher, as you guys can see, we do have a resistance coming up at about 4,100. So again, not a lot of room to run to the upside as well. So again, just being careful going to the upside or the downside at this point, in my opinion, if we are short term in this. But if we are, again, playing long, if we are playing that anticipation and again, that shift in the market of decrease in rates, again, after our decrease in CPI, after we had a gap up and we are now holding that gap up at this point in time, if we continue to hold it after FOMC, if you're playing into that decrease in rates in December, then that's a different story. But as far as intraday, just being very careful because there's not a lot of room to run to the upside or the downside as we are anticipating FOMC minutes on Wednesday. Now, again, with that said, if you are a day trader or you are looking for very volatile breakouts, we mentioned any breakout that is worth looking at throughout the day, 2.5 hours before market open. We mentioned any pre-market news that you guys need to be watching. I'm telling you guys, this is the place to be. If you guys don't believe me, I hope you guys can hear it in my voice that I really do care about getting these alerts in front of you guys, and I hope I can bless you guys as well. Go to instables.com in the description below, and you will never miss a breakout alert today again. And all of you Instables, I appreciate you guys. We're going to continue to go at it. Take what the market gives us as we always have. Again, have a blessed weekend. Taking one day at a time is extremely key in this market. If we're going to have pullbacks like this, if we're going to have a consolidated market where we're waiting for that rally in the market, again, a nice decrease in CPI, so that very much could happen. We very much could get that momentum on the upper end of our channel here. So we're going to keep an eye out for that possible bullish candle setup. If we do get a rejection, if we have a pullback, again, just letting these discounts come to us. So again, just staying cautious at this point. We'll see exactly what happens. Again, we had our nice anticipation from Tim Rose mentioning that possible Fed pivot and then a nice decrease in CPI, very nice rally that we had. So now looking to see if we continue to respect our 20 here. We will see exactly what happens, just letting the play come to us here. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in the next video.